Hello dear students, welcome to Devika's Commerce and Management Academy. We are seeing inflation accounting. In inflation accounting, net assets are given and some other transactions are given like some purchases, sales, expenses, etc. etc. So how do you calculate loss? Okay, monetary loss or monetary profit. Related to this, we'll work out two problems. One problem I will work out, another one you are going to work out. I'll explain, then after that you have to work out. Two problems. Essay problems, important problems also. First problem is given on the desktop. This is from Pankaj publication, RP Trivedi, problem number 10. Okay. So the problem you can note down or take a screenshot. First, let me explain the problem. The problem is said like this: form the not form from the information given below. Calculate the net monetary gain or loss from the accounting year ended 30th June 1999. So some information is given. According to that, you have to calculate the net monetary loss or gain, whatever it may be. That is for the year ended 30th June 1999. What is given to us? First, net monetary assets. Net monetary assets 1/7/1998 means at the beginning of the year 1000. Net monetary assets on 30th June 1999, end of the year. Okay. So we'll start the problem always with the beginning of the year net monetary assets, whatever is there. With that, we'll start the problem. Now we need 1000 rupees. So with this, we are going to start the problem. Now transactions, what are given to us? Few transactions, total 6 transactions are given. Remember always when we want to calculate profit or gain, always to the net assets, you have to add the incomes. If any 6 transactions are there, out of 6 transactions, if income is there, you'll add. If any loss is there, deduct it. So that we get the monetary loss or profit. Okay, simple formula. Net assets we are going to take on the top. We are going to add only the incomes and all the expenses, deduct it. You'll get it. Clear with this? Now what are the transactions are given? First one is cash sales, second one is credit sales. Whether cash sales or credit sales, this is an income. So these two items together we are going to add. Next, credit purchases. Purchasing means expenses. Credit purchases, wages, other operating expenses, interest paid, all these things are expenses. So all the expenses we are going to deduct. Income, add. What do we have income? Only the sales, credit sales and cash sales. And expenses, 4 expenses are given. Credit purchases, wages, other operating expenses and interest paid. All the expenses we are going to deduct. Now what is given? Index. Index as on 1st July 1998 is 100. Means beginning of the year index is 100. Index at as it on 30th June 1999. End of the year it is 150. Average index for the year 125. We'll calculate according to the requirement. First we'll start the problem. So already I have drawn the columns. So calculation of monetary profit or loss for the year ended 30th June 1999. End of the year we wanted to calculate monetary loss or profit. How many columns we have taken? One is particulars, another one is HCA, means historical cost accounting. Historical cost accounting, HCA. Then CF, correction factor. Then CPP, current power purchasing, CPP. 4 columns we have done. First what we'll do, we'll start with the net monetary assets. Net monetary assets at the beginning of the year. At the beginning of the year. Or if you want, you can write even the date also. How much is the net monetary assets? It is 1000. For this, what is the correction factor? Correction factor last 3 it is given. So now here index is given, beginning of the year 100, end of the year 150. Average index is 125. When we want to calculate correction factor for the beginning of the year of the net monetary assets. We can take 150 by 100. Always end of the year 150 by 100. So this is 150 by 100. Calculations we'll do later. So to this, what we are going to add? We are going to add only the incomes. So that you'll write increase during the year. Add increase during the year. Increase, why we are saying increase? Any income means assets are increasing. So increase during the year. We have only two transactions, right? One is cash sales and credit sales. Together we can take total sales. Okay. I'll write total sales. Why to write it separately? Together we can show 8,000 plus 10,000. It is 18,000. You can write it in brackets 8,000 plus 10,000. It is 18,000. So this is sales. Now correction factor. Always 150 by what to take in the downside denominator? 150 by 125 we take. 125 average. 125 is average. We are taking 125 because sales have done throughout the year. Not just end of the year or beginning of the year. End of the year means 150 by 150 will take. Beginning of the year means 150 by 100. Now throughout the year, if any transaction is happening, then you have to take the average. Assuming that sales have done throughout the year. So we are taking 150 by 125. 150 by 125. Sales are over. Next, what else? Purchases, wages, other operating expenses, interest, all these things are expenses. So we can say less, decrease. Here increase during the year. We have only one item, one income. So that is increase. Now rest of all the expenses are decrease during the year. Here we have only one item. Now here decreasing, first one is cash credit purchases. Credit purchases. Credit purchases are 7,000. Next, wages. Second one, wages. Wages are 2,000. Other operating expenses. Other operating expenses are 1,000. Next, interest paid. Interest paid on 30th June 1999. Interest is here 2,000. Now let's see correction factor what we have to take. These three expenses, credit purchases, wages and operating expenses, these are also assumed that throughout the year we had these expenses. When throughout the year you are spending any amount, that will be definitely average factor we have to take throughout the year whenever you are using it. Beginning of the year means you could have taken 150 by 100. Throughout the year means 150 by 125. Same like here. Okay. These three we are taking 150 by 125 because throughout the year we had credit purchases. Throughout the year we had wages. And throughout the year we spent some operating expenses 125. Why we are saying throughout the year? Because they did not mention anything. When these expenses occurred, that is not mentioning. But interest paid is mentioned. We are paying interest on 30th June 1999. Means end of the year. End of the year. End of the year means here you can take correction factor as 150 by 150 only. Beginning of the year means 150 by 100. End by beginning. End of the year means 150 by 150 only. No beginning, no 100. 150 by 150. This is the only item. Interest paid is given end of the year. So we are taking 150 by 150. Point to be noted. Please be careful about this. Am I clear? Anything else? That's all. So we can close it. You can say net monetary assets at the end of the year. This is net monetary assets at the beginning of the year. Now at the end of the year, net monetary assets. How do you get? First we'll close this one. We need to calculate all these things. 1000 into 150 divided by 100, which comes to 1500. And this one 18,000 into 150 divided by 125. This is 21,600. Sorry, here it comes 21,600. 21,600 plus 1500. This is 23,100. Now this one is 19,000. In the same way, all these amounts also we need to calculate. 7,000 into 150 divided by 125. 8,400. 2,000 into 150 divided by 125. 2,400. Next 1,000 into 150 divided by 125. This is 1,200. This 2,000 is 2,000 into 150 divided by 150. Same only this is. So we'll total up this one also. 7,000, 9,000, 10,000, 12,000 it is. 12,000. So net monetary assets at the end of the year. End of the year means 19,000 minus 12,000. So which comes to 7,000. In the same way, this total also will say 8,400. 8,400 plus 2,400 plus 1,200 and 2,000, which comes to 14,000. 14,000 minus 23,100, which comes to 9,100. This is end of the year. Net monetary assets at the end of the year. Now what do we need? Net monetary loss or assets. Now if you see, CPP value is 9,100, but historical value is 7,000. The cost of the assets historical value is 7,000, whereas CPP means it must be this much, at least this much. How much? 9,100 it must be, but whereas the historical value is 7,000 only, less na. So it is a loss. So what do we say? Net monetary loss. How much is the loss? 9,100 minus 7,000, which comes to 2,100. 2,100 is the loss. Simple problem. Only you have to remember the correction factor, what we have done the correction factor. Let me give you once again the glance of the problem. If you see the problem, they are asking net monetary loss or profit. What is given to us? At the beginning of the year, net assets are given. net assets. To that, what we are adding? 6 transactions are there. If it is income, add. If it is expenses, deduct it. We have income of only one item, that is sales. Whether it's a credit sales or cash sales, whatever it may be, it's an income. So that we have added. And rest of the expenses, 4 expenses: credit purchases, wages, operating expenses, and interest paid. All these are expenses we are deducting. Pro forma you understood. Historical cost, HCA we have written, and then after that correction factor and CPP. Correction factor, how we are taking? We have given 100, 150 and 125. This is average. This is beginning of the year and this is end of the year. 3 are given. Always remember, when you are taking the assets at the beginning of the year means 150 by 100. So 150 by 100 we have taken. What we are adding? Sales and these expenses: credit purchases, wages, and other operating expenses. These 4 items: sales, credit purchases, wages, operating expenses. These 4 items are assumed that throughout the year we had these transactions. Whenever any transaction is taking place throughout the year, we'll have to take the average. This 150 is consistent always. 150 divided by 125. So we have done 150 by 125 to the 4 transactions. What about the last one, interest paid? Particularly they have mentioned interest paid end of the year. This is end of the year. If it was beginning of the year, 150 by 100, because 100 is beginning. 150 always should be on the top. 150 by 100. Average means 150 by 125. End of the year means no need to touch this 100. Even 125 also need not to touch, because this is also further throughout the year. Now this is clearly mentioned end of the year. End of the means will take 150 by 150 only. Isn't it? Amount will be same as it is. Like, important thing is that correction factor what we have to take. Calculate it. Total, if you add to the net monetary assets, if you add the income, you got 19,000 and 23,100. If you deduct all these transactions, that is total is 12,000. Okay, 19,000 minus 12,000, you are getting net monetary assets at the end of the year. So this is as per the HCA. As per the HCA. Now as per the CPP, it is 9,100. As per the CPP, 9,100. As per the HCA, 7,000. What does it mean? Very clearly you should understand, the value is 7,000, whereas as per the CPP it must be 9,100. We don't have 9,100. We have only 7,000 only. The difference is the loss. So you are writing end of the year, net monetary loss is 9,100 minus 7,000, that is 2,100 is the net monetary loss you are showing. Am I clear this problem? Yes. Next, I'll give you one problem as homework. Anyhow, already I have given the solution. Don't see the solution. Problem I'll read out. Understand it. Try to work out and just check your answer with this solution. Same like this problem only. Almost same. Now see the problem. This is 11th problem from the R.P. Trivedi, Pankaj Publications. A company had the following monetary items on January 1st. Debtors, bills receivable, cash. These 3 are current assets. And the bills payable, creditors, and net monetary assets. Means assets are total 71,000, 41, 10, 20,000. 71,000. From that 71,000, if you deduct liabilities, current liabilities, bills payable and creditors, that is 10,000 and 25,000, you are getting net monetary assets of 35,000. Net monetary assets 35,000 means this is the beginning of the year. You have to take this amount. With this amount, you are going to start the problem. Like previous problem we have started, net monetary assets. Something was given. In the same way, this is the amount we required. Don't touch debtors, bills receivable, cash, bills payable, creditors. All these things need not to touch. We want only net monetary assets. Net monetary assets which is given 36,000. 36,000 only we are going to take. To that, you are going to add the income and deduct the expenses. Now, downside it is given. The transactions affected monetary items during the year were, what are the transactions? Sales, 1,41,000 made evenly throughout the year. Sales is a income. We'll add. Purchase of the goods, 1,05,000 made evenly during the year. Evenly during the year means throughout the year they have done. And operating expenses, 35,000 were incurred evenly throughout the year. So this is also evenly. So we'll take this one also, expenses, purchases, operating expense. Both we are going to deduct. In the same way, one machine was sold for 18,000 on July 1st. Machine was sold. So when machine was sold means it is income. We are going to add this. One machine was purchased for 25,000 on December 31st. So this is expenses. So we'll deduct it. Now on January 1st, average for the year. On January 1st, index numbers are given. The general price index was as followed. Beginning of the year 300. Average for the year means during the year 350. On July 1st, it means July 1st, mid of the year. Some transactions are given on July 1st, like debit. If you see, the machine was sold on 18,000 on July 1st. July 1st means we'll take the 360 only, because on July 1st index is given 360. And on 31st December 400. So for transactions like debit, the machine was sold. What is the factor you are going to take? 400 divided by 360, because it is clearly mentioned July 1st. Throughout the year means you will take the average. Understood? Very clear. I don't want to explain more, because if you understand this problem easily, if you have any doubt, you can see the solution. Now what they are asking, you are required to compute the general purchasing power gain or loss for the year stated in terms of the current year end rupee. Same problem. Solution is this. Same like net monetary assets at the beginning of the year, it is given increase during the year, sales and sale of the machinery is there. Decrease during the year, purchases, operating expenses, purchase of machinery. 3 items. If you deduct it, you are going to get total, it is net monetary assets end of the year. 1,94,000 minus 1,65,000, 29. In the same way, 2,28,000 minus 1,85,000. So 43,000 you are going to get. It means the value should be at least 43,000, but we have 29,000 only. It's a loss. Same thing we have mentioned, net monetary loss. 43,000 minus 29,000, 14,000. 14,000 should be your answer. Am I clear? Want to take screenshot? Very clearly mentioned. Okay? If you have done seriously this problem, if you are getting the correct answer, if you understood, please mention it in the comment box. I'll be very happy, because I'm unable to see you all. Simply I'm explaining. A teacher expects always a feedback of the students. Without feedback, there is no use of teaching. You know it. So please mention it in the comment box. How many of you are getting the correct answer? Same like this problem. Okay? Mention it. And check out the playlist. There are many subjects which already covered, and practice well. Don't forget to share this video. Stay connected. Good luck.